Every time we hear that there is an avenue which offers tax efficiency, naturally we get happy. Who doesn't love saving on taxes legitimately? So let me introduce you to a kind of mutual fund scheme which will help you do just that. Equity-linked saving schemes, or ELSS for short. So every year, when you compute your tax liability, you remember hearing about this section called ATC, right? Now never mind if you can't recall, ATC is a section of the Income Tax Act which allows for certain deductions from your taxable income. So for example, if you're paying the premium for a life insurance policy, you can deduct that amount using section ATC. Likewise, any investment made in pension schemes, fixed deposit, even the repayment of the principal portion of your home loan, so on and so forth. The only thing to remember is that in total, you can claim a deduction of only up to 1.5 lakh rupees. Now, within this ATC offering is also the ELSS. Now, an investment made in ELSS up to 1.5 lakhs qualifies for tax deduction up to that limit. So what makes the ELSS so special that it gets this kind of favor which no other equity fund gets? In principle, it is like every other equity scheme, right? So here's where it differs though. ELSS have a mandatory lock-in of 3 years. This means that once you invest your money, then you have to remain invested for 3 years to be eligible for these tax deductions. And ELSS normally invests a minimum of 80% of their assets in equity or equity instruments. And this is what makes ELSS an ideal tax planning instrument. And you can increase or decrease the investment as well annually. So it gives you flexibility in that sense. The one peculiarity that is seen with ELSS though is that people rush to invest in them at the very last moment, when an SIP in an ELSS would work not just to smoothen out the last minute volatility, but also you can break up the required amount into many small pieces, so you don't have to pressurize your wallet towards the end of the year. And over the years, you will be able to build a sizable corpus by allowing compounding to work its magic. But remember when I said that in ELSS there is a 3-year lock-in? So if you're choosing to do an SIP here, then you must remember that every last SIP of yours should complete 3 years in case you're planning to redeem. But speaking of redemptions, it's not always necessary to redeem your ELSS investment when they complete 3 years. ELSS can invest across market caps. They are managed by professional fund managers. So by letting your investment continue, you would have not just received the tax benefits, but over the years, you will also gain from the continued compounding. So in this respect, all experts are unanimous in saying that ELSS investments should be treated like any other investment, and you should withdraw your monies only if you've reached your goal. And I'll tell you why. We did a very interesting study of the Nifty 50 index over the last 23 years. This research studied the instances of returns from the benchmark index since its inception, and the results will surprise you. Over a 1-year period, there was only a 57% probability of getting over 10% return from the Nifty. Stretch this to 3 years, and the probability will increase to 63%. Over 5 years, the probability that you could make over 10% from the Nifty rises to 71%, and over 10 years, this number rises to 81%. And as this probability increases, the chances that you could make negative returns from equities become zero over the longer term. So the longer the holding period, the lower the odds of negative instances. Which is why it is often said it's not about timing the market, but time in the market. And now we also have the added advantage of opting for a passive ELSS. So like other passive funds, these too will track their pre-designed benchmark or indices comprising of the top 250 stocks by market cap. Fund houses can now choose whether to provide actively managed or passively managed ELSS, but not both. So if you like this video and want to stay on top of more such videos, do subscribe to our channel by pressing the bell icon, and you will be alerted every time we release a video. Thanks so much for watching, and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.